Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view in the gold market. So actually, well, we've got the performance that was obvious with the higher CPI numbers. In general, our trading stuff has worked, as we said that yesterday we have discussed this in details, that more bearish signs have appeared, not only on the gold itself, especially based on the performance on the intraday charts, but also we have discussed the dollar index, we have discussed 10-year yields, and actually this drop has happened. But what is more important right now is that I would like to return back to the things that we have discussed in the recent weekly report on the gold market, when we have explained in details what Fed United States treasuries would like to do. Just recall what we talked about the interest rates, that we said that it is too early to buy. Recall how big banks have called for everybody trying to push all households on the bond market, making them just buying and buying on the current yields. So recall what we talked about Bill Gross comments, who said that it is too expensive right now, the bonds, and we expect that should be higher rates will come. But overall environment was creating so that investors would be trying to investors to think that the period of the higher rates stands behind, and big banks have made the really big efforts to do this. I just scared to imagine what amount of the households just put their money in long-term bonds for now. And all the stuff we talked about, that's we expect a new inflationary spiral very soon, and that higher rates will not help Fed to control it, just because currently inflation has absolutely different nature. It's not the inflation of the prices. This is inflation of the break of the demand and supply balance inside of the economy, and it can't be resolved totally only by applying the higher rates. So it means that the current action that we see, it will be not the short-term reaction, and from that standpoint it means that we should get downside continuation. In the weekly report, once again, when we have finished the analysis of the plans of the Fed and the United States Treasury, we said that in the whole 2024, at least until the autumn of 2024, we think that gold remains under pressure. It's just based on what things the Fed and Treasury would like to do. They would like to support the vision of the prosperity, support the performance of the stock market, and to postpone as much as they can the crash of the economy and the crash of the stock market. That what they would like to do. Moments that they have shown some increase in inflation in the statistics, it's already talks very big things, just because they can't even hide. I suppose that some increase has been hidden, but as they have shown the 2 decimal point of the rise month-to-month inflation, it means that they can't hide it. So they have to show at least partially, because otherwise later the difference will increase more, and it will be even more difficult to hide it. And it means that currently we see the strategies that we have just explained in the report. That's gold market might be under pressure and deep retracement could happen. Recall that we talked about the possible action even to 1865 area. That's probably could be a different deep retracement later, but for now I would consider these levels. First of all, we have the CBCD down. Now all questions concerning what the grabber will start working taken off the table. Triangle is broken. Market right now coming to this level. This is our first target, will be 1977, 1983. This is COP, but I wouldn't rely on this level too much. First of all, because it already has been tested right there. This pull back down after this spike. Second, because the action just has started. So I'll just mine a target, and even if mine reaction will happen here, more probable is further downward continuation, and I would consider still this level around 1917, 1937, well, an average around 1925. So somewhere this as the next possible destination point. This is what we have on the daily chart. On the long time frame, on the 4-time frame chart, market is completing right now our first target with the butterfly, but action stands really fast. It means that the further downward continuation could happen. Maybe even we will get it this week, just because we still have lots of statistics on coming soon. So yesterday, tomorrow it will be retail sales. Later it also will be the PPI, some production indexes, Fed manufacturing, Michigan, and so on. But currently I would focus on retail sales. I think this is next most important data on this week after the CPI numbers. So from that standpoint, it mostly agrees with the CPI numbers, on COP target on the daily chart. And once the retracement will be over, hardly it will be very significant. Market could proceed lower to the 1962. This will be next destination point in the short-term trading. By looking at the hourly chart, here's how our setup for selling has been triggered. COP data has been released. So once market will complete this target around 1982, 1977, we could get some bounce, and well, based on this bounce, I would watch for these two levels. First, 30% pullback and the confidence. Currently it stands around 2010, 2013, but as market will move slightly lower, these levels probably also will move slightly lower. So retesting of these previous lows, this also by the way might be lows of the butterfly, let's see, right. So you see probably this confluence will appear right around the lows of the butterflies, around 20, even somewhere in this level, once the pullback will happen. I hope you understand what I'm talking about. I just mean that when the market will complete 1977, these levels will be also lower, just because market will create new lows, and the confluence probably will coincide with the lows of the butterfly. So now it stands $10 above this area, and just watch for these levels for possible taking the short position, because I suppose that this new action that we see, it will not be the short term. I think that it will have some consequences. So that's our current view on the gold.